Good afternoon, everyone. Welcome to the Olivet City Council meeting for August 31st, 2021. Can we please have roll call?
Councilmember Carl,
Here.
Councilmember Waldman,
Here.
Councilmember Springer,
Here.
Chairman Weil,
Absent with excuse.
Mayor.
Here.
Item number 2 is communications. Mayor, we have no written communications this evening. Then item number 3 is the city manager's report.
I actually, as this was, as a special meeting, I actually do not have a report for you this evening. I'm gonna wait, and on September 14th, I'm just gonna outshine. Or not.
Item number 4 then is city council reports.
All right. We'll start to our far right.
I have nothing to report at this time, Mayor.
Okay.
Mayor, I attended the pension board special meeting, and I believe that we are going to have Brian from
Yes.
Yes,
Marquette. He is
from
actually
Marquette
on
is
now.
on, and he will do the same presentation to us that he did to the pension board regarding private placement and how it fits into the investment policy.
Okay. Councilwoman.
Thank you very much. First and foremost, I want to thank the city for the red line version of that explanation of what will be going on tonight. It was very helpful. It is much appreciated. I have a PCDC meeting coming up soon. I reported on the last one. I have nothing additional to report at this time.
Thank you very much. At this point, we'll be hearing from any citizens.
Mayor, I don't know if there's anyone online who would like to speak. Doesn't look like it, so I think we can go ahead and move on.
Okay.
Item number 6 is resolution number 2021-211, a resolution approving an amendment to investment policy statement, the salaried employees pension plan of the city of Olivet.
Mayor, as the memo said, we have the pension board of trustees is recommending a change to the investment policy statement. And that policy statement kind of dictates what the pension can invest in, as well as what kind of percentages, how that might be, how funds might be invested in different types of investments. We have with us tonight Brian Goding with Marquette Associates, as well as Tom Lansky. They are our advisors, or the pension board of trustees advisors. Brian's been working with us for a number of years now. And this is actually kind of an exciting time for the city and the pension. And with that, I'm going to just kick it over to Brian. If you want to talk a little bit about the proposed changes, and I can share my screen and bring up those changes too, Brian, if you want to start talking.
Ryan, you're muted.
Thank you. Thank you, Barb. I wonder if I can share my screen because I put some things in the order that I want to talk about. I'm actually.
Go ahead. Nope, go ahead.
Okay.
It's all yours.
All right, thank you. Well, good evening to the council. Thank you for allowing me to be on here today. You should be able to see a cover page that says Marquette Associates, August 31st, 2021.
Yes, we do.
Okay, great. So I just have a summary, and I was just going to cover a couple of items on here, but I do have some backup information if there are any questions or if the council would like greater detail. As Barb mentioned, this is a kind of a big event for us. We've gone for a long time working with Principal, who was your primary provider. We've been able over the last some number of years, I'm not even sure how many years, 5-6 years, to move the riskier assets out of Principal. So they don't affect what we call the benefit index, which is a minimum funding level we have to have invested in principal. And so we've taken a lot of the risk out of those assets in principal, and we're at a point now where we can start further diversifying the portfolio. So I'm here today to just show you a couple of decisions that were made by the pension board and the investment policy statement that's a result of those decisions that needs your approval. So with that, I will, as I say, I was just going to cover a couple of pages, but I'm happy to go into greater detail depending on how much time the council would like to spend today. So this is a look at the output of our asset allocation software. And what we have done, this software is a fairly sophisticated computer model that we use that not only helps us decide how to allocate the assets, but it also, based on current economic environment, gives us an idea of what we can expect in returns from the various asset classes. So this isn't a case where a group of us sit around in an office and all compare our notes on what we think is going to happen. This is actually based on historic returns and current economic environment to determine the likelihood of getting an expected return from the various asset classes. So as you can see here, your current portfolio that we've been operating for the last some number of years, I'd say probably 5 years, 4 or 5 years. We have about 30% in fixed income, most of it in what we call a core portfolio, which is basically a Bloomberg Barclays aggregate index mandate, where it's the broad US bond market with a little bit in high yield and a little bit in preferred stocks. We've had about 40% in US equities, about half of it in large cap stocks, about 25% of it, of the equity portion in mid cap, and about 25% of the 40% in small cap. And then 20% in international, 10% in, and the breakdown of that is about half of it, or 10% of the total portfolio in the developed large cap market, about 25% of the non-US allocation, or about 5% of the total portfolio in non-US small cap, and then 5% in emerging markets. And then we don't have anything in defensive equity. This was a proposal that we also carried to the pension board. They decided not to go with the defensive equity this time, so we don't currently have any, and the proposal is not to go forward and have any of that. We've had about 10% in real estate and nothing in private equity. If you look at if you kind of ignore these other portfolios, because these are just other ideas that we had, A, B, C, and E. If you concentrate on portfolio D, there's just a couple of small changes that we would like to make. We keep the bond allocation, the fixed income allocation at 30%, but we change the makeup of it a little bit. We keep, instead of having 25% in that broad US bond market allocation, we reduce that to 10, and we put 10% into what we call Core Plus. And basically Core Plus is this core portfolio with what we call the plus sectors. And those plus sectors would be things like high yield, bank loans, maybe some emerging markets debt, some foreign debt, just things that have a little higher yield, but possibly some more volatility, but not a huge amount invested in those things. And then we supplement that by adding a little bit to our high yield exposure to go from 2.5 to 5, and preferred stocks from 2.5 to 5. We've changed on our US equities. We're actually decreasing. Our proposal is decrease US equities by about 5%, from 40 down to 30. And unlike what it shows here, we're actually, what the board actually decided to do is decrease your US equities down to 32% by taking about 1% out of large cap, 1% out of mid cap, and 1% out of small cap. So it's a little different. This would actually be, instead of 35, would be 33%. we're also reducing our non-US equities by a couple of percentage. And that's where we're getting the 5% total reduction in equities, 3% from US, 2% from non-US. And this will be 9% developed and then 4.5% in both non-US small cap and emerging markets. As I say, the board elected not to put anything into defensive equities. That was one thing that we may revisit in the future, but for now, they weren't comfortable in doing that. We are keeping our real estate exposure the same. And then that 5% that we're taking out of our total equities, we're putting into the private equity market. And the reason that the private equity market is attractive to us is, number one, the return expectations are higher. The total volatility overall is lower than the public markets because these things are not valued as often, and they're not subject to the ups and downs and the extreme price movements in the public equity markets. So they tend to have smoother returns over time. You do sacrifice some liquidity. They are not as liquid as public equities. So, but the total portfolio has plenty of liquidity right now. And between the real estate and the private equity, we've got we're proposing about 15% of the portfolio to not be very liquid. That doesn't mean we can't ever get our money out. It just takes us a long time to get our money out of those investments. Why are we doing this? Well,
May I
number
ask a
one,
question?
yes, certainly.
On this defensive equity, is that something that's kind of like a less risky kind? Can you give me a better understanding of defensive equity? It's not that I'm trying to make this prolong any further than what it is, but if you can just give me a short and pretty version.
I'd be happy to. The defensive equity in this, as I say, we're not doing this, but it is a strategy that involves the sale of covered options. So it's basically a strategy that was used by the big wirehouses for many, many years in their option desk. They would write puts and calls. They would write options and sell them, and they collect the income over time. And basically, you can think of an option on the equity markets like an insurance policy. You bring in a premium. The goal over time is not to pay out as much in claims in the case of insurance, or in payments for when the markets go against you in the case of these equity options. And over time, about 85% of the time, you end up paying out much less in claims than what you have coming in those premiums. So it works a lot like in financial insurance, like the hazard insurance markets, but it is just a income producing strategy that the managers that do this claim over time you'll get pretty close to equity market returns with less volatility, and it's a smoother return because you're just collecting option premiums over time.
So it's a lot less risky, but it's got a lower return.
Correct. It could have a lower return. They're hoping that over the long run, you're going to get about the same return as the equity markets,
Thank you.
but it hasn't kept up recently.
Okay.
So the idea of doing this, the reason we're doing this is based
Hey,
on
Brian, I
our,
think you have another question.
oh, I'm sorry. Go ahead.
Brian, thank you very much. It's Missy. I had that exact same question that the mayor asked, so I'm glad someone else was curious to ask it as well. So it's not as risky. I don't know this, but is defensive equity kind of like an annuity? Is it or no?
No,
Okay.
no, it really couldn't be considered an annuity. An annuity would be something that's issued by somebody that's going to take your money and
Right.
invest it and then make payments. This is a very different strategy than what you normally see. This is basically selling options, and I say they're covered options, so you can't lose any more money than you've invested in it. Unlike some option strategies where they use leverage, there's no leverage. It's a very low fee. It's just a systematic process of selling options over time into the market and collecting
Okay,
that
thank you. And I'll
income.
do my own additional research of understanding, but I appreciate that comparison and response.
Can I just interject one thought, Brian? Just to be clear, the board discussed that defensive equity at length, and for a variety of reasons decided not to do it. They didn't feel it was the appropriate time to do it. The whole strategy is, it's a strategy to do that. And at this point, they weren't comfortable with where the market was, where it was moving, and doing this at this particular point. So they pivoted away from that to where Brian is going to bring us, which is to do private equity.
Yeah,
So
and
while we can discuss it, they dismissed it right now and pushed it to the side, and they'll revisit it, but not right now.
Okay, and so that you know, it was just for my own
I know.
edification for asking the
I
question.
just want to make sure that we spend enough time on the thing that they really want us to look at so that we can answer all those questions, because there should be enough of that.
Okay, you can go ahead, sir.
okay, thank you. So the result of going to portfolio D in this allocation, basically trading out 5% in public equities for 5% in private equities, it gives you a higher return. Current portfolio has an expected return of just over 6.25%. This brings the expected return up to 6.62%. And it actually lowers the volatility. It lowers the uncertainty of returns over time from 1103 down to 10.72. So this bottom number here is just a ratio of return to risk or return to volatility. And you can see the current portfolio is at 0.57. This brings the utility, and you can kind of think of this as like a miles per gallon type of statistic. You're getting more bang for your buck. For a given level of risk, you're getting more return. So that ratio goes up to 0.62. Are there any other questions on the asset allocation or what we're doing there?
I have a question, and if you could scroll it down to show the other way, please, if you don't mind.
Let's go back up.
Right there, right there. And Ruth could maybe answer this as well. So you're showing us the current. Under portfolio A, B, C, and D and E, these are options, or are some of these portfolios already in place?
These were options
Okay. I
that
just
the committee considered.
Okay, thank you. I just wanted that clarification. Thank you.
Okay. So I'll go ahead. And my next exhibit is really just your current guidelines. So this is the updated version of your guidelines. We didn't really change anything in the guidelines until we get down to the allocation. And we redid the target portfolio and the minimums and maximums to match portfolio D with the modifications that I mentioned. 30% fixed income remains, that didn't change. We reduced equities from 40, US equity, excuse me, from 40 to 37. And we did that by reducing the large cap from 20 to 19, the mid cap from 10 to 9, and the small cap from 10 to 9. So we pick up we drop off 3% there. We reduced the non-US equities from 20% down to 18. And basically 1%, you don't see it here, but 1% came out of the developed, international, and 0.5% came out of both emerging markets and non-US small cap. And then we added 5% down here into private equity to match portfolio D. We changed the benchmark here to match that target allocation. So made the same changes, reducing the broad US equity index, the broad non-US index, and added the private equity to it. And then, and that was it. And then that really was the only change in the guidelines. Everything else is as it was before. And that really was it. So, I'm sorry, down here in the addendum, we list all your managers and the benchmarks that we're using to evaluate them. And we did add private equity fund of funds The index we're going to benchmark it against is the Cambridge Associates All Private Equity Index. And Partners Group is the manager that they chose. I believe they have the authority to choose the investment manager, but I believe, and correct me if I'm wrong, this city council has to approve the change in the guidelines.
Well, do you want to talk about what private placement is so the group understands what's going on here?
Sure, I'd be happy to. I just didn't want to take time if you wanted to, I didn't know how much time.
You guys
wanted
want
to
to
take
know
for
what's going to happen
Sh-
or?
Sure, but before I do, I would like to ask just a clarification question to the city manager. The policy change is the red line under the commingling mutual collective or pooled funds. That is part of our policy change, the red line
Oh,
that he didn't go over, but in all honesty, I understand, he's looking at stuff and things are moving. And I brought my iPad today. So,
okay, good.
Brian, just so you know, I took the updated one along and did a red line version so that the council could see in the policy statement exactly what was changed.
Yeah, I wish I had done that because I did miss that. I did add this line.
Right.
Um,
and that is our policy change within this document. That reflects the policy.
That's one
change.
of the
That's one.
changes, yeah.
Right.
All the red line changes, that whole statement is your policy.
Oh.
And so all the red lines are the different changes, yeah.
Okay.
And I think the other thing is that we're calling out specifically private equity as the alternative investment.
Besides cash, right? Yeah.
Well, where you see alternatives
Mhm.
and in red is private equity. Private equity is an alternative investment and we're calling it out specifically as the alternative investment so that it's very clear what it is, where that money is going.
Mhm.
Okay, so when you invest in private equity, what are you investing in? What is it?
okay, well, that's where I'll go next.
Go next.
So let's I'll give you a little bit of education on the private equity markets. So this is the deck that we have gone over with the pension board. So when you think of owning a business, there's basically two ways you can own the business. You can own it as a public entity where it's traded on the stock exchange and you have various shareholders, or you can own it as a private entity where it is not available to anybody to buy. It has to be sold on an individual transaction and the price has to be negotiated. There isn't a public market to go to. Over the years, the equity markets have changed. As you look at this graph, the US public companies, the number of them have dropped from back at 2000, have dropped from over 6,900 firms down to less than 5,000 firms and less than 4,400 firms. And the number of investable private equity backed companies has increased from about just under 1,600 all the way up to 7,700. So this is a much larger universe, much larger opportunity set to invest in. Also, as a private owner, the private equity managers have more say in what happens in the business. They can actually go in and they can have a seat on the board or any number of seats on the board. They can basically take a controlling interest. They can bring in talent. They can bring in executives and people with the expertise to run these companies. They can go out and consolidate and buy other companies and bring them in and grow the company. They have much more control than a public equity investment where you're basically, you can vote for the board members, you can vote for the audit, you can vote for some shareholder resolutions, you can vote for some, a handful of things, but you don't have any real control over what happens in the country. That the market is huge, over $2.9 trillion in assets, and it's basically doubled over the last decade as the number of private companies has grown and the number of public companies has shrunk. You can invest in a spectrum of risk and return expectation from very conservative debt and distressed debt, mezzanine debt, to very, very risky areas of the market like venture capital and seed capital and angel funds, where you're basically investing in companies that don't even exist yet. The type of investment we're talking about really concentrates more in the buyout area, kind of in the middle, might have a little bit of debt exposure, might have a little bit of a venture exposure, but most of it is in this middle ground, and it's well diversified with Partners Group, who's the manager that we're talking about. You can see that, that depending on the type of investment, venture capital, growth equity, buyout, the debt strategies and distress, there's various return expectations from very high goals to much less, much lower return expectations, is what I'm trying to say. And the duration of these investments varies a little bit. So it's a very broad, very diversified market. Basically, when you commit to a private equity fund, you commit to the fund. They take that commitment. They don't take your money, but they take that commitment. It's a contractual commitment, and they go out and they start investing that money in companies that they want to buy, and they call that money as they make the investments. They invest it over a period of time, and then they actually have exit strategies where they either go public or they sell to other private equity firms, or they sell to other strategic buyers, maybe a bigger company that's in the same industry that wants to add another company to its business. They're typically, anywhere from 10 to 12 years, but at the end, they also have the ability to extend for 1 or 2 years. So what happens over time is you commit, they call capital, and then slowly as they start to make these investments and start to harvest these investments and actually gain not only income from the business, but also income from the sales of these companies, they start distributing assets. So you start out with negative cash flow going out to invest in, and then over time, they send you your money back. These are not liquid. You can't readily go out and say, well, I want my money back. In this case, however, we're investing in a manager called Partners Group, and this is an open-end fund. It's not liquid like the public markets, but there is some liquidity. It's an open-end fund. It's ongoing. They are constantly recycling this money and investing in private equity managers, investing in different strategies in the private equity market, and rolling these investments over time. So there is liquidity, but we would have to give them notice. And in a normal market, we could get our money in a few months. In a market where like the financial crisis or a market where the economy is not doing so well, it might get extended out for a year or even more before we would be able to get our money out
Give
of
me
it.
that page. What does LP stand for?
Limited partners.
Thank you.
The general partner is basically the private equity fund that makes all the decisions. They usually put in their own capital as part of it, but they run the fund. And then the limited partners are people and entities like us that are going in and investing alongside with that general partner.
Ryan,
Yes.
what is the initial investment that the pension is going to make? And what is the minimum requirement that partners required of us?
We're making let me go back up to the spreadsheet. the total fund is 5 million, I'm sorry, $25 million. And we're talking about putting 5% of the money in there. So that would be our investment. Their minimum is actually $10 million, but because we have at Marquette, we have, I'm sorry, I didn't get up there. At Marquette, we have so many investments with them and such a good relationship with them that they waive their minimum. So they're willing to take the 5% of our money.
Okay, so for those of you without calculators, so that would just be, 1,250,000.
Thank you.
That's 5%.
Yeah, 5% of 25 million.
And we had to have 25 million before we could even be entertained as a client, correct?
That's correct. Yeah, there's rules that they have to follow, that they have to have sophisticated investors, and for whatever reason, the SEC feels that if you have more than 25 million, you're smart enough to invest in these things, and if you have less than 25 million, you're not smart enough to invest in these things.
Okay, so now if I could ask a question off of that.
Sure.
'Cause Ruth and I have seen this happen in the umpteen years where we had to put money in because we were lower. What if something were to happen, God forbid, that we've seen before, where our investment value would fall under 25 million, and we're in this private equity scenario, and it's not meeting, or I'm assuming it's not meeting SEC guidelines. Are we still good?
You're still good because you reached the $25 million threshold, and nobody is going to come in and tell you that you have to divest in something because market action has taken you below that 25 million. You've achieved that particular benchmark. So
Thank you.
it would not force a sale or anything like that. So, there's different return calculations. I don't know how deep into the weeds you want to get into this, but because the manager actually calls the capital and actually decides when to return capital, we use what's called an internal rate of return calculation, which is different than we use in the rest of the portfolio. In the rest of the portfolio, we use what's called a time-weighted return calculation because we decide when to put money in and when to bring money out in the traditional investments. So a time-weighted rate of return basically takes that out of the equation, and we don't want to penalize a manager because we decided when to put it in. But in the case of private equity, because the manager is calling it and returning it to us, we want to factor that in as part of the return calculation. So we do use a different return calculation called an IRR, or internal rate of return calculation. So that's a little different, but that's reflected in our reports.
Can we see those management fees again that you went past?
Oh, yeah, these are just examples. These do not actually reflect the management fees, but this is a typical example. This is an education piece. So this is a typical example. So do not take this as the fees associated with your particular investment. In fact, Tom, you have some information on the Partners Group fees, and I can go to the terms page on the Partners Group presentation.
And fees for private equity are going to be higher than just buying an index fund, just because, as Brian talked about, the amount of work that actually goes into, hiring people, fixing up businesses, finding ways to extract more value from them. But our expectation, with that said, is higher returns.
Okay, thank you.
So I think I said it's a $10 million minimum. It's actually a $5 million minimum. I did misspeak there, but we're definitely below their minimum, but they are allowing us to put in $1,250,000 into the fund. So their management fee is, their standard fee is $150,000. They've given us a fee break.
Yeah, our fee. So if you put in how this reads, so just anyone up to $100 million putting in gets 1.5 charged 1.5%. Once anyone starts putting in over 100, you see 1.4. Anyone starts putting in over 250 million, you see that number. But we've negotiated a lower fee for our clients just off the bat, regardless of the amount, once we're over this, $1 million mark. So that's 1.4%. So we do kind of come in as if we were putting in that higher amount.
Thank you.
So they're going to, basically this is a fairly diversified fund, but you can see I talked about the various categories. They'll put anywhere from 45 to 75% into actual private equity, about 15% or between 5 and 40% into asset backed type private equity. That could be real estate, could be infrastructure. They'll put about 10% into private debt, and then there'll be about 10%, 0 to 30%, but roughly 10% in listed securities. Often those might be where a private equity investment went public and they hold the public entity for some period of time, or in cash. Qualified purchaser, that's why you have to have $25 million to invest. You have to have that, you have to meet that threshold. And then they actually have monthly liquidity in this. But as I say, that can vary depending on what the markets are doing. Any other questions?
Did you
Anything
say
else?
they could repurchase monthly?
They have liquidity monthly.
Okay. If I could ask my fellow council member, Ms. Springer, who has been with this board for many, many years, what I'm hearing we're getting, because we're connected with the entities that we are, is in the private equity realm, we're getting a little more bang for our buck because of our relationship with who we have. We're getting some better numbers and opportunities as a result of that relationship.
Obviously, that is what Brian and Tom have said, but I think if I could sum this up, I think regardless of what the fee is, I think that looking at this as just another integral part of the portfolio, and I think in many ways a really exciting part to this portfolio. It will allow us to be invested in places we would not heretofore be able to be invested in. For those, just a quick trip down memory lane, for those who don't know, we were only invested in principal, and then, with Marquette's help, we were able to divest ourselves of some of our riskier investments in principal, which were creating all sorts of problems for us, put them into Vanguard. And now we have this opportunity to be able to do this private equity, which up until we hit that $25 million mark was not open to us. And I think that while, it's enticing to know that we're getting the lower fees, I think the real enticement here is that this private equity is a great asset to put into this portfolio. You want to say?
And I don't disagree with that. I was just
Yeah.
speaking to the added value of this and looking at the graph that clearly reflects where the private
Right.
equity is going up.
Right.
I mean, yeah.
I'd also like to add, and I'm sure that Partners Group would like me to show this to you. The reason we chose Partners Group is their performance has been among the best in the private equity world. These are returns. You don't see what the absolute return is up here, but you can see the top 25% of returns in the private equity market are shown up here, followed by the second 25%, the third 25%, and then the bottom. And you can see that Partners Group is, among the top, looks like 5 firms that are well up into that first quartile.
Can I make a comment? So I did attend the pension board meeting to hear their presentation, but I just wanted to note about private equity that you can kind of think it in the same vein as an individual investor who's the starting financial advice for anyone is to first collect 6 months worth of expenses in cash. That is your first investment because it is the most liquid. And if you need it in an emergency, you can have it immediately. Then you start to invest in stocks and bonds and those kinds of things. We have just reached the next level, okay? Which is this is more liquid than stocks and bonds. They're not totally liquid like cash. And having something illiquid is a small part of a fairly liquid overall large investment is not that big of an issue. Just like if you have the 6 months worth of cash in the bank and your investments go down, you still have that cushion. Okay, so this is not what we're changing the entire portfolio to. That would certainly be a mistake. But this is a portion that gives us more return, but is less liquid. And the chances of that causing us a problem are small as long as it's a small proportion of the overall portfolio. Okay, okay. Yeah.
Please proceed, sir.
So that's really, you can see there, well, let me go back up here. Very good performance over time. You can see when you talk about the total internal rates of return, they've been in the high teens to mid 20s with their funds. They returned almost 2%. I'm sorry, 2%, 2 times. 2 times what has been invested in their funds. So they've done a very good job. And then you get an idea of absolute numbers here in the particular fund that we are looking to go into. So it's done very well over time. And I'd be happy to answer any more questions, but that's really all I have for right now.
Mayor, I'd like to make a motion to approve Resolution 2021-211, resolution approving an amendment to the investment policy statement of the salaried employees pension plan of the city of Olive.
I'll second that.
Okay, can we poll council?
Councilmember Carl,
Yes.
Councilmember Waldman,
Yes.
Councilmember Springer,
Yes.
Chairman Weil,
Yes.
Mayor,
Yes.
motion passed.
Okay, thank you very much.
Thank you.
Brian,
Brian.
Tom.
Thank you, gentlemen.
We will sign off.
Item number 7 is issuance of an intent to award notice to Wright Construction for Warson Park improvements and GRG Centennial Greenway 599C project.
Okay. I'm going to bring over Katie Aholt with Navigate Building Solutions. And then I will also share my screen with the agenda item. We talked last week that we received 2 bids, and they were both competitive bids, and they met all the requirements. They were both actually a little higher than what we had budgeted, what we had anticipated. We knew going in that there was going to be we had some concern with pricing due to supply chain and the kind of the ups and downs in the market right now. So we're doing something a little bit different here, and Katie had a very complete memo for you folks. We are suggesting that we go with the lowest bidder, Wright Construction, and that we, prior to entering into the final agreement, we actually enter into an intent to award notice, and that we take the next couple of weeks and work with them on some value engineering to get the budget in line. This has been done, actually Navigate has done this before on another city project, and they did it with Wright Construction. We're not looking, I think we're asking them to find, 300,000 in some value engineering. It seems like a lot, but it's not really when you're looking at a $10 million project.
What was your figure? 300,000?
Uh-huh.
Okay.
Yeah. And we know that there are some things, you know, that we can look at. With that, Katie, I'm going to ask you if you just want to talk about your experience with having done this before and also with the, with working with Wright Construction.
Sure. Thank you, Barb. So as Barb mentioned, we have gone through this process recently on another project that Navigate is involved in. It's actually for Webster, so a new fire department there. So similar circumstances where they took bids, the bids were received over budget. And prior to entering in any sort of agreement, we followed all of the standard procurement policies. So similar to what we did in this case. So we interviewed both Wright Construction and KNS, as the memo indicates here, and really just validated that both of the bids received are qualified for the scope of work that was put to bid. So the selection to award to Wright in this case is based on their bid and the information received on bid day. So just want to make it clear that the selection is not based on this potential for value engineering, but it's based on their qualifications to complete the project. So from there, similar to the previous project, we went into this intent to award phase. We requested that both the contractor and the design team help identify opportunities for value engineering. And if that can't be completed, then we basically reject all bids and go back and either redesign the facility or go back out to bid. So similar case here, we will not award if we can't come to a resolution on the budget. The last couple things I'll touch on here is with your approval tonight, we will go into that value engineering phase. We will come back to you. Our target is September 14th and request award of the contract at that time. The award will be made for the value of the base bid. So like I said, we will award based on standard procurement processes as the lowest qualified bidder to Wright Construction. And then any of the value engineering options that are selected to move forward by the city will actually be issued as a post-bid addendum by the design team with a deductive change order. So I think that summarizes what we're requesting here in the recommendation. Barb mentioned we did this with Wright and we're very successful on that project in Webster.
We have a question. Go ahead.
And Katie, this question's back to Barb Sunday. I'm just a little bit confused.
Mhm.
Barb, when you go to the chart that shows the bid and everything,
Mhm.
and yeah, right there. And I'm seeing the targeted value engineering monetary figure at 900,000.
Mhm.
And I asked you, because I thought I heard you say 300,000. Where am I confused in the difference of your saying 300 grand and this saying 900?
One of the things is, that will bring that down is the additional 560,000 that we'll be receiving when we refinance the bond. So that brings that down. And then we also think we can find some other things we can find some other things. We're also looking at other opportunities.
Okay, so refinancing is going to bring the other 500,000.
560.
Yeah, okay. And the contingency money in here is accurate. It's already being counted. The contingency is being counted here. You're thinking with the refinancing, that difference will bring it down to the 300 grand.
I think we'll be
Okay.
very close.
Okay. I just wanted to make sure I was connecting that. All right. Thank you very much. Thank you, Mr. Mayor.
I have a question as well.
Mhm.
We have been talking about possibly getting an MOU together. So that before we do any kind of construction going
Mhm.
forward for the city of Olivet, will this be in place before they turn any dirt?
Are you talking about the MOU?
As far as with minority and women contractors for the city of Olivet?
As far as having the review done?
Yes.
Or as far as actually what they're required to do?
It's having the review done so that they understand that's what
Yes, we
want.
will have some, well, they're tied to what they're proposing. Okay, they're tied to what they're proposing in here. What then we talked about is who's going to oversee that and double check that.
Okay,
And we will have, and we've talked about using the county, and we will have that in place. Yes,
So,
before they turn dirt, yes.
so say, for example, that they don't meet what they say they're going to do, what happens?
They would have to give reason as to why they do not, why they could not make that. And then we would have to determine whether that was an appropriate and realistic reason.
And if we find that it wasn't, then what?
Then they have to continue to look for additional subs. One of the differences with this and what we've done before is they've given us their list of subs. Okay, and they're contracting, they're negotiating with those subs for the dollar amount. And so there shouldn't be a reason why they don't hit their percentage because they're already contracting with those subcontractors.
No, I'm just.
Whereas, whereas in the case of like Opus or the Gateway, when we did that, they don't have their subs yet. They don't know, who their subs are. So they may have to, we don't know how they're going to meet that. This is more similar to a road project, a MoDOT road project, where we know where they're getting their subs, who they're using to meet these targets. And so, and they're entering into contracts with those entities now. So there should not be a reason they don't meet their percentages. Now, that's separate from reviewing it and ensuring that it happens.
Yeah, that's what I'm saying, because
Yeah.
a lot of, I'm speaking this out of information that I've gotten from people
Mhm.
who have been in the construction industry.
Right, I understand.
And they've had history with this company
Yeah.
before where they self-monitored themselves.
Mhm.
And they said that they're going to have a certain amount of minority participation
Right.
and did nothing.
And that's why it is incumbent upon the city, whether or not we contract with the county or contract with someone else to oversee that. It is our responsibility to make sure that they have those contractors on place.
And if I could
That's
follow up,
where the rubber hits the road here.
Go ahead.
and if I could follow up, if that entity fails to deliver, and I think, there's been situations all across the country where a contractor thinks they have what they have, but then their sub fails to deliver, and that sub is a minority. What next? Does
You-
it slow the process of our project because we're waiting for them to come and meet that number with a
What you
reputable?
would do if for some reason, say a business goes out of business and that was one of the businesses they had subcontracted with. We would ask them what other work has to be done still. They still have a job that needs to be done, right? If somebody doesn't perform the work, they still have a job that needs to be done. And so then we would expect that they would enter into an agreement with another DBE or WBE, and that they would then also, or they would look for other contracts and such that they would be using. If you're looking for, and this is kind of one of the things that we've talked about, these are goals. We have set these up as goals. We are not particularly in a situation of kind of putting in, we have to monitor. Okay. If they don't meet their goals, then it's going to have to come back to you, and there's going to have to be an explanation of why. I can't sit here. Yeah. Uh-huh.
It's because,
I
like,
understand.
like, for example, if, with Greg Yowich, he would have to pay a penalty if he doesn't keep up his end. Well, why shouldn't they?
We had a redevelopment agreement with him because of that agreement.
Excuse me?
I'm pretty sure we had this conversation.
We've had this conversation.
We have had this conversation.
Okay, I'm sorry.
Yeah.
I'm just
No.
asking
I
again.
know, but-
And
apologize.
I would say that we are bidding under the we are bidding for this work, okay? We have bid, we have requested, we have put out our goals. Okay, we had 2 firms bid. Okay. We are putting in whatever we can to monitor that. And we have not talked with them about any other, anything else.
We can revisit it after we talk. We can keep moving. I mean, I get it.
Uh-huh.
I get it. We can keep moving. Anybody else have any other questions? Okay, go ahead, Barb. I'm sorry.
Okay, no, Katie, I don't know if you have anything else.
I don't have anything else to add, Barb.
I do have one more question because you put in there, we gotta find, well, it said in there 900 grand or other source to deal with the 900,000. And I'm gonna go to your figure of 300,000. Is there any other, what comes to mind to consider other means or options of finding that 300,000? Is there, I'm gonna go into to the funds that we're getting from the federal
No.
government.
No, that, the idea is that they will look and they will give that, that's part of the agreement, is that Wright Construction will look and they will propose things back to us. And then we will look at those proposals and determine, just like we did with this building, what do we do and what do we not do? And then we will kind of, we'll see where we're at. I mean, it's possible they may propose 400,000 and we say we only want 2, and then we're gonna have to figure out where we're gonna get the money from. Right?
Yeah, Barb, I was going to add into that too, just a reminder that this construction contract is really only one component of the total project budget. So the community center and Warson Park improvements that we've bid here is only really a little over half. We're still in design for the remainder of the parks work. We have several other large line items in our budget that are still being designed and developed as well. So we don't have to target the full overage of the bid amount just on this line item. We still have the opportunity to make adjustments to those other items that are still in progress and potentially develop some savings there as well.
Okay, and please forgive me for my extensive inquiries today. What that tells me is, but we're still, how do I want to put this? We're still looking at different materials and cost to where at the end of the day, you're gonna, they're gonna come back with the targeted value engineering. And if down the road, we're blessed with whatever it might be with money, we're still gonna use those I'm concerned about lesser materials. That's really
No,
what I'm concerned
this
about
is-
for 300 grand down the road. If what I'm hearing from you now, Kate, is, hey, there is the flexibility with money through some of the other things we still need to be doing in our plan. And so,
I think what I would say is that anytime you're doing a building like this of this much, that it makes sense to do some value engineering, because there's always things that you could add. What we have already said and what the council has talked about before is we're not going to look at reducing anything that will impact the future. We're not going to look at changing the design of the building. We're not going to look at getting rid of the kitchen. We're not going to look at those types of things. What we're going to look at is, okay, where are there places where we can do some, make some changes that either things that we can add in the future or materials that we can look at that are like, hey, did you guys even know you use this material? This is different. And then we'll look at those, we'll compare those materials. And if they're the same, then maybe that's the reason, they're going to be looking at this. They've already looked at this, the design and the engineering. They've already looked at this to give us a bid, right? So they've looked at it more closely than probably, than anybody, you probably. And And so now they can now say, you know, and look at it and say, well, this is some low hanging fruit. Now, whether or not the council accepts that is a different story. That's a different story. You know, but it doesn't make sense to not go through this process to do that, because we've got, as Katie said, we've got more projects to do, and you know, any amount of money we're given, we could probably easily spend. And so what we're doing here tonight is we're asking for this notice to award. It allows us to then meet with, we can't negotiate this with Wright Construction until we get some type of authority to do so. We can then sit and as you know, I've said, we can sit and talk with them, and we can say, you know, where do you see as some value engineering? We can talk with them about their MBE and their WBE, which I've said we could do. We can make sure that those, you know, those are fast and firm. We can push for more, but at this point, what we're asking for you tonight is just the ability to sit down and have those conversations, because we can't negotiate until we have the authority. And that's what this does.
So I would be ready to make a motion if we're ready, or if there's further.
Okay, I'll make a motion to, I recommend the issuance of an intent to award notice to Wright Construction for Warson Park improvements and the GRG Centennial Greenway 599C project.
I'll second it. Councilmember Carl,
Yes.
Councilmember Waldman.
Yes.
Councilmember Springer,
Yes.
Chairman Weil. Yes. Mayor,
Yes.
motion passed. Item number 8 is Parks and Community Center project update.
I'm going to ask that this be deferred until our September 14th. It makes more sense to do this after we've gone through the discussions with Wright Construction and we're a little further along in some of the park stuff.
Does anybody have a problem with that?
Sounds good to me.
Okay, let's keep moving.
Item number 9 is Bill number 2958, an ordinance authorizing and directing the execution of an easement plat and maintenance agreement with the Metropolitan St. Louis Sewer District and a supplement to the city's detention basin easement and maintenance agreement with Keat Olivet Gateway LLC. First reading.
Oh,
Oh, I thought you were going to introduce me.
I would like to introduce our city attorney, Paul Martin.
Okay. This ordinance approves two things. Number one, a easement plat and maintenance agreement with MSD, and number two, a supplemental agreement with Keat for the same maintenance that we're agreeing to maintain for MSD. And as a little background, this all started when, obviously with Olive Crossing, when MoDOT gave us the basin, but they required that we give them a drainage easement and agree to maintain the easement. So that happened a long time ago. We then turned around and agreed to let Keat develop the basin, provided they comply with the drainage easement, and that Keat maintain the drainage improvements that MoDOT was requiring. So that was the initial agreement with Keat. Now, to redevelop the property, MSD is requiring sewer improvements, which are essentially the same as the drainage improvements, or at least they're close enough to not worry too much about. But they're requiring these sewer improvements in the basin area, and as owner, they're requiring the city to give them an easement and agree to maintain the easements, the sewer improvements for MSD. Keat is obviously doing all the work. So since what we're now requiring, or we're asking from Keat, is that they acknowledge that this is all their responsibility. The ordinance thus grants MSD their easement and the maintenance agreement, and it also approves the supplemental agreement with Keat, whereby Keat says we know this is all a part of the development and we're going to do it all. So that's what this is all about.
Go ahead. We have a question on the floor.
I'm assuming that we made this agreement in conjunction with Keith.
Yes, Keith contacted us. They said that they really were on a tight schedule. MSD dropped this on them and they wanted some action pretty much immediately. So I prepared the ordinance and the supplemental agreement, shared it with Greg Yowitz, and he said absolutely fine.
Yeah, the issue is that the MSD, it has to be the property owner that signs the agreement. So there are several of these agreements, similar agreements that Keat is signing for other locations within the development. This just happens to be in the detention basin, which we own, so we have to sign it.
So if this is a priority that needs to get done as soon as possible, should we read it twice?
But
I'm sure Mr. Yowitz would appreciate that.
that's up to you guys.
I mean. this seems
There
to
isn't any
be-
reason not to.
I mean, this seems to be more housekeeping stuff than anything else.
I would support that.
So then,
I-
okay.
You would just, someone would need to make a motion to set aside regular rules.
Mayor, I make a motion that we set aside our ordinary rules and read bill number 2958 for a second time tonight.
You have a second?
Second.
Okay, if we could poll the council.
Councilmember Carl,
Yes.
Councilmember Waldman,
Yes.
Councilmember Springer,
Yes.
Chairman Weil,
Yes.
Mayor,
Yes.
motion passed.
I'd like to,
Mayor?
Okay,
I'd like to make a
Paul?
motion.
Wait,
I have
wait,
to
wait,
read.
wait.
We gotta have
Time out.
public-
let
Mayor?
Paul go through this first.
Now that we've had the motion to set aside ordinary rules, you have to technically open the meeting up for comment by the public. And we call it a public hearing. It's not really a public hearing, but
But,
it's
yeah, that's
opening
what
the
we've
meeting
always
up to the
talked about.
public for comment on what we're doing.
Can I have a motion?
You don't need a motion to do that.
Okay, I'd like to open this up for public comment.
Whacker gavel.
Mayor, I don't see anyone with any comments.
Okay, can I have a motion
You
to,
gotta close it.
Second reading.
yeah,
Oh,
Yeah,
do we
read
have
it
the
for the
second?
oh, please read it
No,
again.
he has to read it the second time.
Bill number 2958, an ordinance authorizing and directing the execution of an easement plat and maintenance agreement with the Metropolitan St. Louis Sewer District and a supplement to the city's detention basin easement and maintenance agreement with Keat Olivet Gateway LLC.
Now you're back to the motion and.
Mayor, I move that we pass bill number 2959, an ordinance authorizing and directing the execution of an easement plat and maintenance agreement with the Metropolitan St. Louis Sewer District and a supplement to the city's detention basin easement and a maintenance agreement with Keat Olivet Gateway LLC.
Second.
All right, can we poll the council?
Just to be clear, that was,
29, did I not say that right? Yeah, 2958.
Councilmember Carl,
Yes.
Councilmember Waldman,
Yes.
Councilmember Springer,
Yes.
Chairman Weil,
Yes.
Mayor,
Yes.
motion passed. Did you say wait?
No, I said sweet, sorry.
Oh, I thought you said wait. I
One
was
less
gonna
thing to
say-
do next
We
week.
do not have
I
to
thought
see
you said
that
Keat.
again.
I heard it say sweet. Sorry.
All right, so that was that. Okay. Item number 10 then is appointment of Daniel Rosenberg to the Planning and Community Design Commission with the term to expire July 31st, 2024. And Brian Weinstock as an alternate to the Zoning Board of Adjustment with the term to expire July 31st, 2026.
I did like to entertain a motion, please.
Thank you, Mr. Mayor. I will be glad to do that. I would like to recommend that we deal with an appointment of Daniel Rosenberg of the Planning and Community Design Commission with a term to expire July 31st, 2024. And on behalf of my fellow council member down there, would also like to recommend that we appoint Brian Weinstock as an alternative to the Zoning Board of Adjustment with a term to expire July 31st, 2026.
And I'll go ahead and second that.
All right, can we please poll the council?
Councilmember Carl,
Yes.
Councilmember Waldman.
Yes.
Councilmember Springer,
Yes.
Chairman Weil,
Yes.
Mayor,
Yes.
motion passed. Item number 11 is hearing from citizens, part 2.
Oh, I'm sorry, hold on one second. So sharing. I don't see anyone who is interested in speaking.
Then item number 12 is the city attorney's report.
I've got a couple of things, Mr. Mayor. First, as of tomorrow, I am officially a member of Kistner, Hamilton, Elam, and Martin, and Paul Martin PC. While it's still going to exist for a while, it's not going to be operational. So I'm gonna have to send everybody new email contact information, and there'll be a new billing process, which is not going to be as smooth as the old one because I was in charge of that and it was easy, and now I got to get an accountant to do things for me, and it's crazy. It's a different billing system. Anyway, just want to let you know. The speech case, the state has filed their brief finally, and the Supreme Court has scheduled oral argument in the middle of my wife's long delayed trip for our anniversary to Hawaii. So I think I have to ask for a continuance.
You think?
I think. Now, the funny thing is that God only knows if Hawaii is going to be open in October. But I wanted to let you know that, and we'll keep you apprised of what the status of that is. Finally, as far as closed session goes, I'm going to run the gamut for you, make sure I cover everything, but I would like closed session for attorney-client communications to discuss personnel, to discuss the acquisition or sale of real estate, and to discuss negotiated contracts under 1, 2, 3, and 12.
So moved.
Second. However, I would like to ask a question of the attorney before we vote on this from his report.
Yes, ma'am, I'm done.
All right, Mr. Martin, you said you're joining with another to create a new law firm, different billing system. Will your cost and fees to us be modified as a
No.
result of this merger?
No, they're going to stay the same.
All right, thank you, sir.
We have a contract.
That is right.
Councilmember Carl,
Yes.
Councilmember Waldman,
Yes.
Councilmember Springer,
Yes.
Chairman Weil,
Yes.
Mayor,
Yes.
motion passed.
Oh, you got all. Huh.
I'd like to, oh, I'd like to make a motion to adjourn.
Second.